What if I told you an invisible revolution is happening right now inside the S&P 500? Every day, boardrooms are rewriting strategies, products are being reinvented, and industries are shifting at breakneck speed, all powered by artificial intelligence. AI is no longer just a buzzword. It's the backbone of the biggest wealth shift in decades. And while everyone talks about Nvidia and ChatGPT, the real gold lies in lesser-known companies poised for explosive growth. Welcome to Elite Trade Club, where today we reveal 3 AI stocks set to explode, the hidden forces reshaping the market and potentially fueling the most profitable bull run of your lifetime. Right now, AI adoption is sweeping across the S&P 500 faster than any previous technological shift. It's no longer just the realm of scrappy Silicon Valley startups. It's embedded in Fortune 500 companies, government agencies, and industries you wouldn't even think of as tech. From healthcare to agriculture, from finance to manufacturing, AI is quietly optimizing processes, unlocking new revenue streams, and creating competitive advantages that are almost impossible to catch up to once established. And here's the thing most retail investors miss. The biggest winners aren't always the AI builders. They're often the companies that know how to use AI to squeeze more performance out of their existing products and services. That's where margins expand, where customer loyalty deepens, and where valuation multiples can go parabolic. 2 of the sharpest minds tracking this shift are Rob Spivey and Professor Joel Littman from Altimetry Research. These guys don't just read earnings reports. They reverse engineer company financials to see what's really happening under the hood. And their message is clear. The AI-driven transformation of the S&P 500 has only just begun. When most people hear AI boom, they instantly think of the dot-com bubble of the late 90s. Massive hype, astronomical valuations, and a spectacular crash. But Rob Spivey draws a different parallel. He compares today's AI wave to the early internet era, when companies like Amazon and eBay were laying the foundations for trillion-dollar businesses, while the mainstream was still skeptical. Back then, the internet wasn't a nice-to-have. It became essential infrastructure. The same thing is happening with AI right now. As Joel Littman likes to put it, you won't lose your job to AI. You'll lose it to someone using AI. That's not just a catchy line. It's the reality in boardrooms everywhere. Companies that embrace AI aren't just cutting costs. They're building smarter products, delivering faster, and making better decisions than their competitors. And the proof is in the capital expenditures. Across the market, companies are pouring billions into data centers, AI training systems, and edge computing networks. These are not short-term marketing gimmicks. This is 7-year, decade-long infrastructure planning. It's the corporate equivalent of paving the interstate highway system in the 1950s. Once it's built, commerce will flow faster, smoother, and at a larger scale than we can even imagine right now. So what's the realistic upside here? The truth is, we're still in the first inning. The transition from AI creators to AI users is just beginning, and the productivity gains are compounding every quarter. For context, when the internet was in its early days, there were only a few million websites, and e-commerce was barely a blip. Fast forward 10 years, and it was a multi-trillion-dollar ecosystem. AI is on the same curve, but faster. Companies today are making multi-year bets on AI infrastructure, with timelines that stretch into 2030 and beyond. This isn't just about flashy demos. It's about embedding AI into the core of how businesses operate. And as adoption deepens, it's going to have a multiplier effect. Each successful AI deployment creates data that feeds into the next one, making it smarter, cheaper, and more valuable. Think of it this way. We're watching the early formation of AI blue chips. 10 years from now, the companies dominating the S&P 500 will be the ones that integrated AI most effectively now. What's more interesting is that different teams often use entirely different AI tools. Marketing might rely on one platform, logistics on another, and product design on a third. Now, multiply that complexity across an S&P 500 corporation with tens of thousands of employees, and you start to see the scale of this transformation. The adoption is not only horizontal across industries, it's vertical within companies. And while Nvidia has gotten all the love for making the picks and shovels of AI, there are dozens of enabling companies flying under the radar. These are the firms embedding AI into creative software, into edge devices, into the global computing backbone. These are also the companies with the most explosive upside, because when their AI tools become must-haves, they don't just get new customers, they become impossible to replace. Before we get to the 3 stocks, let's talk mindset. because even the best picks won't make you rich if you mismanage them. Joel Littman tells the story of an investor who made a killing on Qualcomm during its early stage, only to miss out on hundreds of % in long-term gains because he sold too early and never bought back in. It's a reminder that the biggest danger in an AI bull market isn't missing the breakout. It's misallocating after you win. Short-term profits can tempt you into selling too soon when the real money is made by holding through years of compounding growth. Joel even contrasts the investing styles of his parents. His father chased the hot stocks of the moment, often selling too soon or too late. His mother took a simpler approach, building a small, concentrated portfolio and holding through the noise. Over the decades, her method quietly outperformed. That's why Joel recommends a core 3-stock strategy. Build a foundation of elite, long-term winners and let them do the heavy lifting. Adobe, ADBE. Known for PDFs and Photoshop, Adobe is far more than a creative toolmaker. It's a backbone of global content creation. Fears that AI will replace Adobe are misplaced. AI is creating more content than ever, and Adobe's tools are essential for refining it. With Firefly and other AI integrations in Creative Cloud, they've doubled AI-driven revenue in just 6 months and boast a return on assets Wall Street undervalues. Beyond design, their AI analytics power marketing, business intelligence, and document management, making Adobe a cross-industry AI enabler with decades of customer loyalty. Qualcomm, QCOM. Famous for smartphone chips, Qualcomm's real growth is now in edge AI, processing AI directly on devices like cars, LOT sensors, and home systems. This enables faster, more private, offline AI capabilities. LOT already accounts for 25% of revenue and is projected to reach 50% soon, with the automotive AI segment growing 30 to 50% annually. With their chips embedded in billions of devices worldwide, Qualcomm is positioned to collect royalties from the entire AI device ecosystem. Alphabet, Google. A quiet AI pioneer, Alphabet has spent over a decade leading in neural networks, NLP, and AI-powered search. Their Gemini platform, NotebookLM, and YouTube AI show they're still at the cutting edge. Critics who say Google is behind overlook that they're embedding AI into products billions already use, like Gmail, Google Search, and Google Cloud's Enterprise AI. Valued well below their potential, Alphabet's total marketing is effectively global computing, giving them room to grow into a $3 to $5 trillion company while monetizing AI from infrastructure to the end-user experience. Here's the takeaway. AI is not a fad. It's the new operating system for the global economy. But the way you invest in it matters as much as what you invest in. Don't chase the hottest ticker of the week. Build a core of elite, diversified AI plays, like Adobe, Qualcomm, and Alphabet, and give them time to work. The gains in an AI-driven market come from computing, not quick flip. By focusing on companies that are both enabling and adopting AI, you position yourself to ride the wave instead of getting tossed around by it. If you've made it this far, you're already ahead of most retail traders who are still waiting for proof that AI is real. The proof is here. It's just not evenly distributed yet. Drop a comment with your favorite AI stock pick. Like this video if you learned something new, and subscribe to the Elite Trade Club so you don't miss our next deep dive. The AI revolution isn't coming. It's here. The only question is whether you'll be a spectator or a shareholder.